Earlier in the day in the Asia-Pacific zone, we heard the first part of this episode on the evolving needs and the major shifts in cybersecurity from Nikesh Arora, Chairman and Chief Executive Officer of Palo Alto Networks. For the second part, we go to Nasir Zubairi, the Chief Executive Officer of LHoFT Foundation, who is being joined by David Leach, the co-head of Global Technology and Cybersecurity Supervision, Policy and Partnerships at JPMorgan Chase, and Nuno Sebastiao, the founder and Chief Executive Officer at Feedzai. Nasir will take this discussion further into what the major cyber threats are today and what we can expect in 2021. For now, let's go over to Nasir and the second episode on the discussion around cybersecurity.
Good morning, everyone, or good afternoon, or good evening, as it is in my case. Nice to be here with you. I have, as Glenn said, David Leach and Nuno Sebastiao with me today. A bit of background on our panelists. So David Leach is the head of cybersecurity and technology controls for Asia Pacific at JPMorgan. David is responsible for driving the JPMorgan cybersecurity, technology controls, and resilience programs in the region. He also co-leads the technology and cybersecurity supervision, policy, and partnerships function, supporting regulatory and policy lifecycle from advocacy to examination for global technology. David is a member of the Asia Pacific Operating Committee, Asia Pacific Technology Operating Committee, and the Global CTC Leadership Team. Prior to joining JPMorgan in 2012, David has headed the Information Security Risk Function at ANZ Bank and at Standard Chartered for Consumer Banking and Corporate Services. Welcome, David. Nice to have you here with us this morning for you, I guess, based in Australia.
Thanks, good morning.
Good morning. And some background on Nuno. Nuno is the co-founder and CEO of Feedzai, one of the leading, if not the leading, AML and security applications in the fintech arena. Prior to starting Feedzai, Nuno was a lead engineer for the European Space Agency and worked closely with several successful technology startups. In 2011, Nuno established Feedzai to fight financial fraud with advanced machine learning technology. Feedzai has raised more than 82 million in venture funding, has 500 plus employees, and continues to keep commerce safe for many of the leading banks, retailers, and payment processors around the globe. Nuno has an MBA from the London Business School, and I think it was just last year, wasn't it, Nuno, that you were voted Entrepreneur of the Year by London Business School? Was it last year or the year before?
It was in 2017, yes.
Oh, 2017.
Indeed. Very proud of that, yes.
I do remember seeing that notice, because as I mentioned, I'm also an LBS alum, and I think we were there at the same time, although I don't think we must have met at some point, but it was good to reconnect with you over this call. So we're talking about the evolving needs and major shifts in cybersecurity. I mean, personally, over the past 12 months, 2 years maybe, I've seen a lot of change in the area of cybersecurity, both in terms of the technologies and solutions being developed, but critically, the reason for that being that the demands and needs of the financial institutions in particular seems to have changed significantly. Perhaps, Nuno, maybe you could comment a little bit as to how you've seen that, what you're seeing in terms of the shift, and maybe more specifically also, how has COVID-19 accelerated, slowed down, or changed the needs of financial institutions in cybersecurity?
Absolutely. Thanks for the intro, and thanks for the question. I mean, what we've seen is an acceleration of digitization. Historically, I think financial services, especially the more traditional ones, would expect that you would walk into a branch, and while they were doing digital transformation initiatives, they were doing it at a certain pace. What we've seen the last 12 months, accelerated in the last 9, was a steep increase of those efforts to be able to do a full life cycle interaction with their clients using an app, using a browser, because no one's going into a branch. So and that is not just giving the kind of functionality. It's basically, how do you rethink the user experience in an app if your value is your brand as a bank, right? So we've seen a lot of that. and we've seen a huge shift in how can I get things deployed faster, and in the hands of my consumers and my clients for my bank a lot faster and in a speedy way, which basically means the things like cloud adoption that have substantially speed up over the last 9 months. So, a massive transformation we've seen out there.
And David, I mean, looking at it from the institutional perspective, I'm sure just as JPMorgan has seen a lot of changes, you're connecting with peers within the industry. What are some of the trends or accelerations or changes you've seen in the appetite and needs around cybersecurity?
So certainly there's been just a continued escalation of the threat landscape. Let's start with that. I think it's safe to say that the primary actors that we're seeing, the primary methods that they're using to achieve their main objective, which is to get money at the end of the day, they're still targeting human vulnerability and manual process. Email and web, especially where there's manual processes around payment fulfillment, we're seeing these actors target that still a lot. And so as organizations mature and they modernize their technology environment, that increasing push towards digitization and straight-through processing actually provides a significant mitigation to a number of these types of attacks, which is really interesting. I think people find that this embracement of the digital ecosystem is actually is potentially a negative and exposes to risk. If it's done properly in the right way, it's actually a huge advantage in terms of mitigating these threats, because you're taking the discretion out of the role of the human. The human's not operating the control directly anymore. So that's certainly something. There's a lot more awareness across various boards, across the financial industry. Probably over the last 5 years, we've seen a continued education and an increasing tension of boards expecting more from their organizations in terms of really recognizing their cyber risk posture and looking at how they go about getting that within tolerance.
So you said two key words there that I'd like to pick up on in a little while: education and knowledge around cybersecurity and resilience. But before that, the second part of my question, I mean, with COVID-19, be it that, yes, there was some variation globally around the way countries handled confinement and restrictions around their various populations. But, in Europe, for example, with total lockdowns in place, simple things that organizations, institutions used to be able to do and take for granted, like getting a signature from a client or sending a fax, for example, became almost essentially impossible, right? Everyone had to shift very, very quickly to being fully digital with all their staff based at home, no contact with clients at all. How do you think, or how did you find that your JPMorgan and maybe others, responded to that? Because in itself, that change and not having really been aware of that before, operated in those environments, in itself leads to some risks for organizations.
Great question. So I think the starting point is you ask yourself the question: who's your primary digital disruptor for your organization? Was it the CEO? Was it the CTO? Or was it COVID-19? And I think the answer in most cases is it was COVID-19. What we definitely saw inside JPMorgan was two things. Firstly, even about a month or 6 weeks into dealing with the pandemic, there were already senior executives saying, what have we learned from this? There's been a ton of work which has been accelerated towards that digitization to enable us to mitigate some of these remote working risks. That's number one. And then number two, a real view of making sure that we had a holistic view of all the risk and control decisions that were being made across the environment. So we kind of knew what the left hand and the right hand was doing. That was really important, because when you've got so much change happening so quickly, you may end up relying on a control that's actually been changed as you're changing your own control posture. So I think those two things were really important, and especially inside an organization like JPMorgan. It's a large organization, it's 250,000 people, over 50,000 people in technology. We were having daily calls with our leadership teams to work through what was happening with our businesses, what we needed to do, and probably most importantly, looking around the corner of what was coming next. And I think the organizations who responded well to COVID-19. They had a couple of things in their advantage. One, they had already started down the journey of technology modernization. They had already recognized the need to be able to do remote management and support over their enterprise technology infrastructure. They had a robust resiliency, operational resiliency and cyber resiliency playbook, and they tested that and exercised it regularly. And then as COVID developed and emerged further, what we recognized with some of those plans, when we looked around the corner, they weren't going to work. So we worked with our businesses to formulate new plans and tested those, right? If we have sales trading people who have to suddenly work from home, and while they don't need to right now, what happens if they have to in 8 weeks? How are we going to handle voice recording and various other things that we'd need to work in that environment? And not just say, here's a theory, but actually get our sales trading team to go home, set up their environment, test it, see how it works, how it doesn't, use telemetry to understand that. So I think organizations who have embraced that modern technology approach are a lot more agile and adaptable, and that's worked well for them. The organizations that haven't have kind of stayed where they were, relied on legacy technology, haven't seen the need to do that. I think they found it much more difficult to adapt and respond to a very volatile and changing environment all around the world. So I think those are probably the primary observations that we had. Definitely our executives recognized that, you know, the momentum gained, that shared purpose and sense of commitment to drive response that galvanized our teams. We achieved so much more in the midst of a crisis than we would normally do in BAU. So it was really, our question now is how do we bottle that and make sure that without making it a fire drill, we capture that shared sense of purpose and keep the teams working in such harmony. Right? I think that's a real thing that we're pondering at the moment as we come out of the, hopefully at some point in the future, the pandemic, and we use that to our advantage in the future.
Yeah, I mean, I think it's incredible, and the excitement I've seen from many CEOs of institutions here in Luxembourg who are amazed at the speed at which their organizations have functioned during the crisis around digital, whereas they never thought that this was the norm. The hope I have is that we don't revert back to the old ways and we continue this. Nuno, was this a boom for your sales team during COVID? Was it light at the end of a dark tunnel? I mean, you must have had a lot of phone calls coming in from institutions as they suddenly got to grips with all this.
Yeah, I mean, it was definitely a mixed. As David was just mentioning, some institutions, either challenger banks that were VC backed, or let's say neobanks spun off out of institutionals, or even some of the institutional ones really pushed forward to how can I speed up my agenda, and we just put out a report that we surveyed all of our clients throughout the globe, and 30% of consumers of these banks opened new accounts, they bought new products during the pandemic, okay? Wow. And 75% of them are now saying that they're not going to go back to the way it was. They want to keep what's out there. And this is astonishing because, as David was saying, this was, it was not the CIO, it was not the head of innovation, it was not some, strategic consultant coming in. This was forced by the circumstances. And what we're seeing now is everyone catching up to this and saying, okay, how do I enable all these user-friendly, all these interactions to occur without a paper, without a physical presence, while managing risk and making sure that cybersecurity, deployments are taken into account. But, I have no doubt there's no going back. And in fact, I'm already working with some of the financial institutions that are looking at, okay, this is the new normal, regardless of, us, and vaccines and whatnot, but this is the new interaction mechanism with my clients. It's better, it works. How do I keep my brand relevant when competition is an app away? And that's the key point of, this removal of friction, making sure that you provide a good service, a safe service, that you're not hacked, comes into play in our domain. So yeah, I mean, I think we're doing our part of, as a company in the wider cybersecurity of keeping all these organizations safe. And I think, but bottom line is, I think it's better And our clients are telling us it's better for the end consumer. It's a better service.
Yeah.
And I think that's what really matters.
No, you talk about, the, I guess, a new era of competition as it has become with digital as a whole, where, previously I think that cybersecurity or security on the whole within banking was seen as a hygiene factor by most of us as customers. We don't go and open a bank account at a bank because they're the safest. We open a bank account because of the services that they offer. It's not like, buying a Volvo instead of buying a BMW. You couldn't sell a bank account on being safe. Do you think that's changing now? Do you think safety is now a value-added feature, or security is a value-added feature of institutional banking, of retail banking, corporate banking, that customers are seeking some sort of guarantee from their institutions that they have the highest level of security around their services that they offer?
I think it's a new dimension, because if you think about banks, historically speaking, they proud themselves of being, safe, not safe, safe for you as a consumer to have your deposits. They were not going to lose the money. They were going to make sure that you'd get that, your deposit would be there, and they would have, core one ratios and whatnot. I do think that now in a digital world, the safety aspect and the risk management aspect, especially when some of the banks, you barely heard of them. They're new. They're not, the centuries old type of institutions. Yes, I think they will play for, security aspects that before were not as relevant. And like many, applications in the digital world, that will become probably a more relevant aspect that they're going to sell to their customers, but nonetheless, something that needs to be done in the background, because in the end, and I'll reiterate this once again, it's about the service you're providing to the customer. Be safe, but it doesn't need to be safe at the cost of experience.
I mean, David, it's an interesting question for you as well. I mean, nobody previously, in my experience and work in banking, when purchasing or opening an account or opening a contract or partnership with a financial institution, would ask as part of their own due diligence, how secure are you? Give me some information about your security. Do you think, is this happening firstly already, or do you see this happening going forward, that customers will demand to know what precautions you're taking?
Yeah, is the answer. I mean, look, it's not a competitive advantage. It's a competitive disadvantage not to have a robust cybersecurity capability that you can demonstrate. I mean, I think that the way I would describe it is this: if we look outside of retail for a moment at wholesale banking, all of our clients and customers are regularly asking us to demonstrate what our cybersecurity maturity is. You see messaging platforms like Swift having an expectation that you have cyber hygiene and being able to demonstrate that. And that's a good thing. Regulators and governments all around the world are also overtly concerned. So the level of inquiry, the intrusiveness, the frequency, where you have to demonstrate your cybersecurity maturity is just on the up and up. I'd say 20 to 30% increase in regulatory inquiry year over year on cybersecurity. And then on the flip side, we're also seeing emerging policy. If I go back 2 years, 75% of regulatory agencies under the Financial Stability Board indicated they plan to introduce new policy on cybersecurity in the next 12 months. Now, that introduction of policy, it may have happened last year or this year. We won't feel the full effects of some of that until 2021, 22. And on the back of COVID-19, you're going to see a much stronger focus on operational and cyber resiliency, and even more policy coming out. So there is heightened expectation across the whole value chain from our overseers, our regulators, and our lawmakers, all the way through to our clients and customers. So yeah, not a competitive advantage, competitive disadvantage. If you don't have it, you're not going to be in the business, because at the end of the day, customers do give us their money with the expectation that they're going to get it back, right? And that's the original intent of a bank. I think that's coming much more into a clear focus now than it has been over the last, say, 15 to 20 years.
Nuno, if coming back to you, I mean, you offer solutions obviously to protect. I mean, do you think we're also entering into an era today where increasingly we need to be able to quantify or value the impact of cybersecurity breaches on an institution to be able to assess the operational risks that these breaches or cybersecurity threats can cause, to understand the impact it has on our business? I mean, obviously, you know, there's one element of brand reputation if there's a big hack, but there's obviously, you know, critically money can be lost. Various other factors can be effective on an organization. Do you see solutions starting to be offered in this place to be able to measure and quantify the impact of cybersecurity hacks?
Absolutely, and I'll give you a couple of examples. You know, part of the wider aspect. You know, was mentioned SWIFT. David was mentioning SWIFT. I mean, you know, their network was hacked in Bangladesh. All of a sudden, there's a big. So, what was an IT hack into a subsidiary or a corresponding bank from the SWIFT network became an attack, or that actually compromised the network as a whole. And that's an example. What we also see is it's not so much the cybersecurity technical challenge of, you know, your system has been compromised. It's more, what are you as a financial institution doing to protect or to manage your risk from data breaches? Very important right now with GDPR and others. You know, losing your data or losing the data of your customers is probably as critical as money laundering activity. But then also money laundering, as an example. You know, a number of banks throughout the globe, in Europe and in other regions, have had massive fines, to the point that those banks could potentially go down because, you know, they didn't have the adequate protocols in place. To, you know, some of the startups that, you know, the challenger banks that are coming up, and we work with them when we take best practices that we've learned with the larger, you know, the city banks of this world and others that we've learned, and that, you know, we take the best practice to these challenger banks and say, look, you cannot think only about, you know, account takeover fraud or transactional fraud or AML or money laundering or, you know, data breaches into your network in isolation. You have to think about it holistically, and you have to have a view that someone's going to hack into your network because they might even want to compromise your transaction systems. We've seen cases where a bank is hacked, they go into their systems of records, they raise the limits on credit cards. This is a cybersecurity breach. But then what they do is they use those credit cards to, you know, essentially spend more than what was the normal limit of that credit card. So what was historically a number of silo solutions, today, especially in a fully digital world, doesn't work anymore. And if any chief information security officer at the bank, chief risk officer at these institutions need to look at this. Not only, oh, do I have my, you know, endpoint security system? Do I have my data system? Do I have a security system? Do I have my transaction fraud system? Do I have my AML? No. Everything needs to come together. And that's the big convergence we're seeing out there in our clients. One place that comes together, makes and looks at it holistically. That's the big change we're seeing, in our view.
Yeah, I mean, it's a lot going on at the moment, and I think being in this domain and offering services and solutions in this domain is increasingly critical. Look, guys, we're coming we've got the last 5-6 minutes of our session. I'm going to go back to that point earlier, education and know-how. I mean, this is critical now, and as it always has been, but now more so than it ever has been before, for all institutions and the financial services industry as a whole. You know, I was looking at PayPal's annual statement from last year. PayPal, you know, arguably the first great fintech of our era. And within that, looking at the competencies of the board, the lowest score they received as a board for any of their capabilities was specifically in cybersecurity, 4 out of 10, whereas everything else was scoring 8+ out of 10. And this is a big tech-orientated finance company. Here's the question. Do financial institutions have the skill set, or are they able to attract the quality of skill set required to try and at least battle effectively in this arms race? David, what's your opinion on this?
There's a lot of competition for talent. We have to work really, really hard. As a large financial institution, we have a certain gravitational pull to bring in top talent. As I mentioned earlier, we have over 50,000 people in our technology department at JPMorgan. So we have a pretty large technology organization. Even there, where we are, we have to work really hard across the tech environment, because we know that a number of our best and brightest are constantly being sought after by the tech industry. So it's really important to try and remain relevant, to provide people with really good career paths, career development, in addition to sort of hitting market value on compensation and salary, really making sure that we're providing them the right education development all the way from whether it be graduate intake or lateral hiring, and designing our organizations to support that, right? Making sure that they understand what good looks like in terms of a culture. All of these things are really important when you look at the people that we're trying to attract now. Cybersecurity is very vocational as well. People in this area, it's more of a calling for them than anything else. So you want to be in an organization where you trust and believe in the leadership, the brand, the culture of the organization, just as much as the paycheck you take every day. So as we think about how we do business and the principles that we have, that's going to be a key factor. And I think that's an important factor for any organization who's looking to attract this type of talent. And lastly, recognizing that the hiring process for attracting people, when you're interviewing candidates, they may have 5 or 6 other interviews on the go at the moment, right? There is such a frenzied interest in hiring good cybersecurity people. So making sure that you're putting your best foot forward as an organization, even from the point that you put out the job description all the way through to onboarding, because that's a very easy way of someone saying, actually, I'm going to differentiate just based on the hiring process. So, a lot of hard work for the banks to carry out in order to remain relevant and attractive to these types of skill sets.
Yeah, I mean, David, no offense, I'm going to be honest, you are at JPMorgan. I mean, yourselves and maybe Goldman Sachs and a handful of other institutions do have that reputation and prestige to still pull in the talent. But Nuno, I mean, you and I, we were at LBS. We were there during the financial crisis, right? LBS used to be a feeder for the financial institutions in London. That all changed, and it's changed fundamentally for schools like London Business School, for London School of Economics, for other finance-orientated schools. Business people don't want to go into banking. How can they draw in the tech guys when the big four, the gaffers, are paying $300,000 per annum to a senior developer? How can institutions continue to compete to get this talent?
I actually don't think it's about the money. I mean, I'm sure JPMorgan can pay those kind of salaries, and I'm sure they have people with those type of salaries. I think it's more about, what do you offer them? One thing we've learned as we build the company is developers, they want to be exposed to the latest technology. They want to be exposed to the latest stacks. They want to be exposed. And what I've seen is, and that, the big four technology companies can give them, startups like ours can give them that, because we're building product, right, that we're going to sell to hundreds of customers. Whereas if you are a consumer of technology and you're not a producer of technology, you typically don't do that. So that in itself is almost kind of like, there's a lot of self-selection, people that just, a lot of tech developers just don't go there because they want to be exposed to the tech stacks. But with that said, there's a few organizations out there that have really good talent. I mean, JPMorgan, Goldman, Citi, Capital One, even Lloyd's in Europe, and Standard Chartered in Hong Kong, and others that I'm aware of. But those are the exception. There's 4,000 large banks in the world, right? They don't have access to that kind of talent. I believe that what happens is, partner with technology vendors and typically upstarts such as ourselves, that we have that talent. We learn from the established, large financial services, the best practices that, frankly, someone out of college just doesn't know. There are best practices in cybersecurity and in risk management that, it's important to bring in from those big players, but at the same time, inject and infuse them with the freshness of technology that we get from those people, those recent grads and whatnot. I think it's the marriage of these two worlds that really drives to a very good outcome.
Gentlemen, we've pretty much come to the end of our session. I don't think we could be any more precise. David, Nuno, I think we could talk forever on this. There's so many questions, so much discussion. I thank you very much for the great insights you provided. Thank you to those who have listened, and I will now hand back to the Singapore FinTech Forum team. Thank you all.
Thank you.
All right, thank you, Nasir, Nuno, and David for helping us round up today's discussion around the topic of cybersecurity.